Thanksgiving kicking off the busiest season for consumer spending. This comes after a mixed read from the retailers in their most recent quarters. Here to share where he sees bright spots in that space is Oppenheimer senior analyst covering consumer and e-commerce stocks, Brian Nagel. Brian, it's good to see you.
Good to see you too.
We had some pretty good aggregate numbers, I guess, in terms of personal income coming through. The monthly retail sales figures have sort of generally been okay. And then you get this choppy back and forth with the individual chains reporting. What do you think the general tone is going into this season?
Well, look, I know there's a lot of debate on this. I mean, I think at the end of the day, we're going to have an okay but not great holiday selling season. And there's a lot of puts and takes here. I mean, Mike, you mentioned a number of them in the opening. I mean, we can't dismiss. I know this sounds silly to most people, but this is a shortened holiday selling season. There's the fewest days possible between Thanksgiving and Christmas. And historically, that's mattered because that's one negative. We also have, I see this with all my companies that are reporting lately. I mean, there are clear indications of a stressed consumer. Now, the consumer is still showing up for big events. So that's maybe a positive for the holiday. But in between these big events, I mean, you're definitely seeing signs of a stressed consumer. So I think that's going to all together weigh upon at least somewhat on discretionary spending.
Yeah, I mean, it's clear it's not necessarily lifting all boats. So what parts of the industry or what areas of your coverage seem like they're better positioned?
Well, Dick, let's talk about Dick's Sporting Goods. So they reported their fiscal third quarter results yesterday. I spent a lot of time talking with their senior leadership. They had a nice quarter, very good quarter. And what they're seeing is continued solid consumer demand for the better brands, particularly in footwear and apparel and some other categories. So I think that's going to be a bright spot, so to say, with the holidays. Consumer electronics, I think it's a little more hit or miss. I was talking to Best Buy yesterday. They're seeing good consumer demand for really large flat panel TVs. So I think, but other than that, the consumer is probably waiting around to see what happens with AI. There's not a lot of consumer-facing technologies in AI yet, but you could have some bright spots in consumer electronics. And then once in the product I want to mention here quickly, and a lot of people may not be aware of it, but Lovesac. Lovesac's a smaller company, very much a disruptor within the home furnishing space. Just recently, they introduced this new reclining seat for their Sactional platform. I visited one of their stores here recently. It's a great product. Again, still very much a niche type item, but I think Lovesac could get a benefit here for the holiday season as people buy this reclining seat.
Yeah, it was funny. I was looking at that chart. It obviously has had a pretty aggressive move. It's a somewhat smallish market cap, but I mean, when you say it's a disruptor, I mean, is it kind of following in the path of a Wayfair, or is it more specialized than that?
Well, it's similar in Wayfair in that it's online. So, but Lovesac's a manufacturer. Lovesac has its own products. There's really only two lines, a Sac and Sactional. But it's very similar in Wayfair in that one way it is disrupting is bringing online capabilities to what has been traditionally an in-store experience with home furnishings.
Mm-hmm. Home improvement, I mean, obviously we got the results from the big ones, and you see the housing data kind of flit all over the place with every move in rates. What looks like is the trend there? Because I saw some people very excited about the breakout in the Home Depot chart.
Yeah, well, I mean, look, let me answer that, but this is going to go obviously beyond the holiday spending dynamic. So, look, what we need for home improvement, and I talk about this a lot on your network, is we need a better housing. We need a stronger housing market. We need more housing turnover. Okay, and that's very dependent upon rates moving lower. Now, so far, obviously the Fed now has started to lower rates. We really haven't seen much in the way of moderation where it counts in that 10-year Treasury. But I do believe that will be happening. I think that's going to be a big theme for 2025. That's a positive for Home Depot and Lowe's. Okay, we need rates to move lower. We need the housing market to unstagnate, and people start once again buying and selling houses, moving houses. And I think that's going to be a big positive over time for Home Depot and Lowe's. In the holidays, funny enough, there's a lot of both companies, Home Depot and Lowe's, now have done a great job with holiday assortments, trim a tree, those silly blow-up things you put on your lawn. They sell those really well. And also tools. I mean, look, the tool category has become a big giftable category, and both companies sell very well the tool category.